No, this is very, very unusual. I'd have to go back. I'm pretty sure that we have not ever seen in the first half of the year this kind of a move.
Hi, once again, everybody. Welcome back to the Comstock channel. I'm Marlon Bowling with you. As always, make sure you like these videos, subscribe to them. You click that little bell icon down below, and we'll notify you every time we have an update. And share these videos with others. Now, today, my very special guest is Darrell Peel of Oklahoma State University, and he is their cattle market specialist down there. And Derrell, I love talking with you about things related to the cattle industry and the cattle markets and what have you. It's been kind of a tough slide here for a couple of weeks now in the cattle market, but overall, I mean, compared to where we were several years ago, things are still not looking too bad overall in the industry, are they?
No, absolutely not. I mean, we've had these long-term supply fundamentals that we're working through. Obviously, we've been in liquidation mode, broadly speaking, for the last 3+ years in the industry. So we pulled cattle numbers down, and that continues then to be very supportive of the market. It's been a little bit tricky. There's a lot of volatility in the market, and we've been kind of up and down here in the last few weeks, but we've been very near record price levels across the board for all classes of feeder cattle as well as fed cattle within the last few weeks. So we're at pretty historical levels.
Yeah, I was going to ask you if that's normal for this time of year.
Well, the seasonal patterns, obviously they get a bit muted. We've been in such a strong uptrend that sometimes it kind of wipes out the seasonality. But when you add the uptrend to, normal seasonal patterns, so for calves, the lightweight feeder cattle, they typically peak at about the end of the first quarter, and that's what they did this year. And part of that is seasonal. Fed cattle also tend to peak about that same time on a seasonal basis. Now, that would assume that you have basically a flat market underneath it. So we've pulled back just a little bit here, but we're very close to record levels. The big feeder cattle actually tend to increase a bit through the middle of the year, but by and large, we're kind of moving sideways into the heat of the summer here. And I think that's probably kind of indicative of the seasonality playing a little bit bigger role, but the underlying trend in this market is still very strong.
You had some concerns before we started the interview about the carcass weights in the cattle as they compared to a year ago. Explain that.
Yeah, in this kind of a market, cattle numbers are falling. Obviously, feedlots and packers both have an incentive to try to maintain production, maintain pounds, maintain throughput in those facilities. Feedlots in particular have a short-term incentive here to basically feed cattle longer as much as they can. And that's even more so enhanced in the last few months as corn prices have come down and the cost of gain in feedlots has come down. If a feedlot sells cattle today, they've got to turn around and replace them with really expensive placement feeder cattle. And so the incentive in the short run is just keep feeding the ones you've got. And we're certainly doing that in this kind of a market environment. That's pretty typical. As a result of that, we've seen a counter seasonal move higher in these carcass weights this spring. They normally decline through about the first half of the year to a low seasonally and then go up in the second half of the year. But they've actually been running higher since about February. Steer carcass weights today are running 33 to 35 pounds higher than a year ago. And that's a lot. That's a really heavy carcass. Again, we've not seen much seasonal decline at all in those carcass weights. So we're offsetting smaller slaughter numbers to some extent with these additional pounds per carcass. And that's limiting the decrease in beef production. Beef production is still going to fall for the year, but it appears now that it's not going to fall as much as we earlier thought.
Have you ever seen a year-to-year shift in carcass weight like that?
No, this is very, very unusual. I'd have to go back. I'm pretty sure that we have not ever seen in the first half of the year this kind of a move. Again, these carcass weights just have not declined seasonally. They normally drop about 30, 40 pounds through the first half of the year to that seasonal low, and we're just not seeing that. It's been running basically flat for the last several weeks. And so as a result, the difference between last year's more seasonal move and this year's lack of seasonal drop has really exaggerated that year-to-year increase in those carcass weights.
Is there a concern, though, that with those heavy weights that could affect the grade or the quality of the meat?
Well, in a general sense, we argue that if you feed cattle longer, you're likely to get a higher quality grade. Now we're at pretty high quality grade in general. I mean, the industry as a whole has achieved very high quality grade. So I wouldn't say that we're, and the data would show that we're not really increasing quality grade beyond where we're at with these additional days. What we are doing is adding more fat on these animals, so the yield grade is going down. They're carrying more fat. The percentage of Y4s and 5s in the industry is, it's averaging 20% or better, and at times 25%. So these cattle are very heavy. And the other part of it is, of course, as carcass weights get big, at some point you reach a limit physically from a packing plant standpoint on just how big those carcasses are and or can be. And most packers have an upper limit on carcass weights, but they're really not, they're not too concerned about being at that limit or maybe even a little over it in this environment, because again, they're also looking for pounds. And so we're, everybody's kind of got an incentive to sort of push the envelope to the top here in terms of how big we can make these cattle.
What are conditions like out in cattle country these days?
In general, we're in better shape across the country. I mean, obviously, if you look at like the drought monitor, we've got less drought now than we've had since early part of 2020. Pasture and range conditions, by and large, are better than last year and a little better than average. Certainly, in Oklahoma here, we've had pretty good moisture. Even some of our sort of persistently drier areas in the western part of the state have gotten moisture recently. So we're off to a pretty good start here that's going to carry us through, much of the summer at least, even if it does turn hot and dry and droughty later. We're gonna have a pretty good season from the standpoint of both pasture and hay production.
I know earlier in the past couple of years, you have stated that you were concerned about the number of heifers and cows that were going to market to slaughter, that it would be very difficult to rebuild the herd. Well, now that we've gone through a couple of years, where do we stand?
Nothing's really changed. We continue to see heifer slaughter that's barely down from a year ago. And so there's, and that's really our only sort of ongoing indication of what's going on with heifers. We don't get a direct measure of the number of replacement heifers except in the inventory reports. We're not going to get a mid-year inventory report. So, so the short answer is there is no data that would suggest right now that we're retaining heifers. The beef cow slaughter, I should say, it's down about 13%. But actually, if you look at that relative to the size of the herd, which has declined with liquidation in the last few years, the current pace of beef cow slaughter would give us a net culling rate for the year of about 11%, almost 11%. And that's well above the levels that you would expect to see during a herd expansion. That culling percentage would normally drop down below, to around 9% or less. So both the cow and heifer data would suggest that we're not in herd expansion mode yet. I think the beef cow herd will get smaller in 2024. And actually, if we start anytime, we may be starting to hold some heifers. I just don't have any data to confirm that. But if we start holding heifers this year with a kind of an empty pipeline that we're working with, I don't think there's much prospect even for the herd, the beef cow herd, to do much more than stabilize next year. We're probably a couple of years away from any growth, and that assumes we get started here at some point.
Yeah, I was going to say, I mean, this could turn out to be like a 10-year impact from that multi-year drought.
I think it's going to be a very extended process. There's a lot of general comparisons to the situation we're in now to what happened about a decade ago. We had severe drought in 2011, 12, and 13 that caused herd liquidation. Then that was followed by, of course, record high prices at that time in 14 and 15. And then a subsequent herd expansion as a result of that. The market tries to incentivize that. Market's trying to do that now with the kind of calf prices we're seeing. But as yet, we've not started that. And the difference is we are starting with less females to work with. We don't have a heifer pipeline, and we did actually when we started herd expansion in 2014. So it's going to take longer. It's going to be an extended process to generate kind of the momentum, if you will, for herd expansion. I think it'll take longer to get there. I think we'll stay at elevated general price levels longer. And, there will be a backside to it someday, but I think that's several years down the road at this point.
Well, the latest jobs data that came out showed higher than expected employment in the U.S. And also, there's a lot of talk about what the Fed will do with interest rates. Can you go out on a limb and try and connect the dots between what's going on in the economy over here and what that would mean for the future demand here for the beef industry here? Is it going to have any impact?
Well, despite a lot of expectations that the economy was, a little bit weaker maybe than some of the data suggested, concerns about consumer spending levels, obviously credit card debt's pretty high, and how long can that continue to go on? But the short answer is, at least beef demand has been remarkably resilient for the last 3+ years, really dating back to the pandemic. We've just continued to see very resilient beef demand. I don't see any change in that at this point in time. We're still watching it. It still could happen. There are, as you say, a number of indicators that would say we should be concerned, but we really just haven't seen it yet. And so the beef industry continues to enjoy that strong demand. When you combine that with the strong supply fundamentals that we have, it's maintaining very robust wholesale and retail beef price levels.
But how much pressure is the slumping hog market putting on the cattle or the beef trade right now? Because it has basically fallen off a cliff here in the last month or so.
Yeah, historically we talk about beef demand and competing meats, so pork and poultry primarily, and look for impacts there. The bottom line is, sort of on an anecdotal level, maybe not on a strong research basis yet, but we just don't see a lot of cross protein impacts in these markets. I mean, if you look at it over the last year or 18 months at least, there's been lots of pork around and lots of relatively inexpensive pork that could be competing more with beef than it appears to be. And so, I think it really comes down to, despite the sort of price discrepancy there, with beef being priced relatively strong compared to pork, the demand continues. The preferences and the quality of beef has been good, and that has continued to maintain very strong beef demand.
So, can you tell, are we selling a higher percentage of ground beef versus the higher price cuts compared to what we did maybe 5 years ago?
Well, it's a little hard to say, obviously, because there's a lot of dynamics involved once you take that animal apart. But on the other hand, you get more or less a fixed set of products from every animal. So the proportions can only change within some range around that. Now, you can grind a lot of stuff down into ground beef, but we try not to grind some things down. That's a last resort. And so now, if you look at the ground beef market right now with cow slaughter falling, and of course, in this kind of a market environment, when beef is expensive, you expect to see some people, at least, we call it trading down sometimes, maybe favoring ground beef or less expensive cuts compared to the middle meats. And it's hard to find a lot of that, although the ground beef market is extremely strong right now. If you look at kind of a wholesale level of ground beef values based on lean trimmings as well as the 50% fatty trimmings, that price indicator for ground beef is basically at record levels. So again, part of that's supply driven, but part of it's also demand driven.
So does this all mean that we're importing a lot more beef nowadays?
We are importing more beef. Again, in this kind of a market environment, it's kind of what you'd expect, particularly with that most of those imports, or a substantial portion of those imports, being processing type beef that we use primarily for ground beef production. So that's probably the tightest supply in the U.S. right now, would be lean trimmings, if you will, and so that we're supplementing that. The marketplace provides incentives to source that, so we are supplementing that with an increased level of imported beef right now. And we mentioned earlier that there's a lot of these fed cattle that are getting fed longer days. They're carrying more fat going to slaughter, so we're producing a lot more of the fatty trimmings on the one hand, and we actually need more lean to turn all of that into ground beef. And so that's kind of a reflective of trying to maintain that balance between the lean and the 50% trimmings market.
It used to be we'd be disappointed if you had a low weekly export sale of U.S. beef that came out on Thursday morning from USDA. And nowadays, I mean, we don't really have it to spare anyway, right? I mean, even if it is a low number, that doesn't really reflect badly on the demand here.
No, that's right. I mean, again, in this kind of a market environment where supplies are tight, production is down, and prices are up, then you sort of expect the international part of our market to behave just as it is. So exports are down a little bit. The market is rationing, if you will, a smaller supply of beef, both domestically and internationally. So those exports are down a little bit, and that's the same thing that's driving the increased imports in this kind of a market environment. And it's all, and it's important to keep in mind that that's at the margin. I mean, none of these vastly change the overall, balance of supply and demand in the industry. The international component of our market is still kind of at the margin. So it's helping to balance things at the edge, but it's not fundamentally changing what's going on in terms of the overall level of production and demand and consumption in the U.S.
Well, Darrell, I enjoyed catching up with you again. Thank you for all
Okay.
the information. You're always a fount of information. So look
Happy
forward
to
to
do it.
comparing notes with you again next time. And let me be the first to wish you an early happy Father's Day coming up here. Hope
Thank
you
you
have a
very
good
much. I appreciate that.
All right, Darrell Peel of Oklahoma State University with us. And yep, that'll do it for this episode. Thanks again for joining us. For producer Brianne Hendrickson, I'm Marlon Bowling. We'll catch you next time right here on the Comstock channel. Thanks for joining us on our Comstock YouTube channel. Don't forget you can also find us on Facebook and TikTok as well. Futures trading involves risk. The risk of loss in trading futures and or options is substantial, and each investor and or trader must consider whether this is a suitable investment. Past performance is not indicative of future results.